Hi, I'm Victor, and in today's video, I'm going to cover Foot Locker, ticker symbol FL. This specialty retailer has seen its stock price really tumble, but when you look at their financials, this is a really solid company, and I believe worth investing. Let me tell you why. So as you can see from the chart, over the past year, Foot Locker has seen its stock price go down roughly 50%. And a lot of stocks have dropped, especially in 2022, by considerable amount. Now, there was an additional reason why Foot Locker dropped far more, and that's because Nike decided to hold back just a certain percentage of the shoes they normally sell to Foot Locker. Foot Locker sold more than 60% of their catalog is Nike, in the high 60s, and Nike wanted to trim that back maybe 5-10%, and that really created a lot of concern with the company since Nike was trimming it back. It gives the opportunity to Foot Locker of diversifying, across other vendors, which is a good idea, selling Adidas and other brands. The other thing Foot Locker's doing is historically they've been in malls, and that business model has really worked. But what they're trying to do is diversify and going, outside the mall and setting up stores, in like single building store locations, especially in less retail oriented, more strip mall locations. And they have different store titles, that they're selling across. I believe that's a really good strategy. People need shoes. People want sneakers. You have kids that have to have sneakers or athletic gear for soccer, football, baseball, whatever sport they're playing. And Foot Locker tends to be the place where they go buy shoes. So if you look at Foot Locker year to date, again, it's dropped quite a bit. But here's why I believe this is a good investment. First, it's a small cap company. They're less than 3 billion in market cap. They have a price earnings ratio of 3.4, very low price earnings ratio. They pay a dividend yield of 5.47%. So they'll pay you a great dividend, and they can afford that dividend. I'll get into more of their financials in a bit. So they pay you a high dividend. You stand, I believe, to participate in upside on this stock. And it's a really well-run company. Their management is solid. They're veterans of shoe retail. And I believe they're going to navigate these changes quite well. And I believe they're going to operate well in 2022, 2023, and this stock could go up considerably. Their latest financial quarterly release was actually for the full year, showed that in 2021, they grew revenue. Prices, for products are going up. Inflation is really, raising prices. But overall, they had a really, really good year. But their forward guidance, along with the Nike news, really worried investors. Now, I like to buy stocks when they're discounted, when they drop. Good companies that I could buy at a discount. And this company certainly fits that bill. In 2022, they've raised their dividend 33%. They can afford that, no problem. And they're going to buy back shares. More than $1 billion worth of shares are going to be bought back. So again, this is a less than $3 billion market cap company, and they're going to buy back a lot of shares. So I think that that's going to remove those shares off the market and make this stock price go up. They have a lot of inventory going into 2022. The reason I bring that up is some of the headwinds they've had in the past is supply chain constraints, as well as having inventory in the right places. And now they have very good inventory levels. So they are optimistic that they'll have all the inventory that demand will need from their customers. And I think that's a very good place for them to be. I calculated an intrinsic value for Foot Locker. I used their free cash flow for 2021, which was $457 million of free cash flow. I used a growth rate of 3%, very conservative growth rate. They can do better than that. If they do better than that, great. It's even, their value is even higher. And I want you to think about the free cash flow of the company. They're less than a $3 billion company. So roughly their market cap is 7 times free cash flow. I can't find that many companies that are in that metric or even near it. So it makes me very comfortable that this is a healthy cash flow producing business. I want to own this business. I want to be a part of the ownership of this business. I discounted the free cash flows that are expected in the future by 8% as my discount rate. And I estimate that this business as a whole is valued at $4.152 billion. But its market cap is 2.9 billion. So there is an opportunity to buy this company at a discount. Right now, I'm estimating that this is currently discounted by 41%. If we use their dividend rate, it should be trading at $38 a share, but it's only trading at 29 currently. So there's a premium from 2 different valuation methods. If you use the dividend method, it's discounted. If you use the intrinsic value method, it's discounted. Now this company isn't going to be, a 10 bagger, I don't think, but this is a solid gainer for 2022, 2023. I think the upside for Foot Locker could be that you're up 25% over the next 12 months, give or take 5%, and you're paid that dividend. So think about that. If they operate really well and grow better, you could be up, 30, 40%, and you're paid that dividend. So I really like Nike for that, Foot Locker for those reasons. And wanted to share that with other investors. If you're interested in Foot Locker, you now heard from one more investor and what I'm seeing, how I look at the company, and what I analyze as I made my decision to invest in Foot Locker. I bought into Foot Locker a few months ago and have been buying additional shares, and will continue to hold it and buy more on dips, as well as buying more because I just think this is a good business to own. One disclaimer is that my videos are for entertainment purposes only. This is not a recommendation for you to buy or sell any stock or security. Please weigh your decisions on your investments heavily and seriously, and I wish you the best of success as you buy and sell your stocks. I thank you very much for watching my video. I'd greatly appreciate it if you liked my video. I would greatly appreciate if you provided any feedback in the comments to help me improve my videos. And with that, I thank you very much for watching my video.